Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand all the latest news on the D Street, starting from the benchmark index moves to sectoral action and also the buzzing stocks in trade. Also, what are experts really advising on what should be your own strategy in equity markets right now. We'll also be focusing on the 1 year of LIC. And 1 year on, what should you be doing if you have your investments in the life insurance major, or are you looking at opportunities at this stage as well? We'll focus on that entire special session, but first up, a quick check on how the markets are doing at this point in time. Well, when you look at the benchmarks, the Nifty and the Sensex, it's definitely another down day, second day in a row when the markets are actually looking weaker. 0.7% of a cut, with the Nifty slipping below the 18,200 mark with a cut of 125 points. The Sensex also declining by 455 points at 61,475. The broader markets also look mixed at this point, with the mid caps coming slowly under pressure, 0.27% of a decline for that one, while the small caps are definite outliers at this point, 0.4% of an uptick for the small cap 100 index. That's the only bright spot that you can spot among the major indices, with the Nifty Bank also declining by 0.6%. Among the other sectoral indices, barring just slight gains that you can actually spot on FMCG counters, rest all of the Nifty sectors are actually down in the red. The pressure being felt the most across the media stocks, financial services, the realty stocks as well, 1.4% down for that one, a percent cut for the metals as well, 0.5% down for PSU banks, private banks. The pharma stocks are seeing some cuts as well. So an across the board decline that you can actually see on the markets. Now, when we talk about the gainers and the losers, today the stocks that are creating pressure on the markets, clearly Kotak Mahindra Bank down by 2% odd, followed by Infosys, HCL Technologies, so whole host of IT names creating pressure. Apollo Hospitals, Asian Paints also seeing some cuts today. On the other hand, the stocks that are far and few between but still holding up in trade despite this muted trend include stocks such as Hero Moto, IndusInd Bank, ITC, BPCL and Bharti Airtel, all up by about 0.5% to 1.5% in trade. But time to welcome our guest on the show. We are now joined by Ashish Maheshwari from Arihant Capital. Welcome, sir, and thank you so much for taking the time out for this discussion. Well, first up, your own sense of how are you looking at the markets currently, and what do you see the way forward for the investors right now? We were, just a few days back looking at markets inching towards and marching towards their all-time high levels, looking at a, better footing, but again, some speed breaks coming in. How do you really see this volatility?
Yes, market is now almost 700 points away from touching all-time high. And in my view, whatever correction we are witnessing, this is not on account of real local factors. Because if it's the local factor, I don't see any negativity as such. The market has quite well digested whatever Karnataka poll outcome was there. And even delay in monsoon was a factor. Market is not bearish about. I think the major reason might be first the US debt ceiling at macro level. If there is some issues slightly nervous on financial sector as banking and financial services are along other than that, the war between again Russia and Ukraine is again getting more momentum. So this is again a factor which market is uh, worry about this geopolitical risk. But as far as Indian markets are concerned, only another positive thing is there that FIs are in buying mode for quite some time, almost 14, 15 sessions we have seen where FIs are continuous buyers. So, like days like even yesterday, they were buyers. So, I'm expecting the flow from FIs will continue in Indian equities, and this market, what we are witnessing correction, will be a event of 2 to 4 trading sessions. After that, we'll again see market inching up.
Okay, so the market correction may be short-lived and just about 2 to 4 trading sessions, and the markets do have in them to bounce back from these lows as well. But like promised, we are going to focus on LIC. For all our wider audiences, it's been 1 year since LIC shares were listed on the domestic stock exchanges after the completion of the 21,000 crore rupees worth IPO, which was the country's largest IPO. However, this IPO was jinxed as the stock debuted at about 8% discount and has also never been able to see that IPO price since then. LIC shares have also corrected about 30% from the listing price and about 40% from the upper band of the IPO price as well. 1 year on, how should you be witnessing the kind of moves that are looking at on LIC, and what should your strategy be? So Ashish, first off, if you could also help me understand, what was your thought when the LIC IPO had come about last year? 17th May, the listing happened. Were you suggesting investors to go ahead and buy this one that time around? And 1 year on, how have you looked at the progress of this stock?
At the time of IPO also, we have given wait and watch basic, because again, the problem with such huge size issues are very wide equity. If you see the LIC, the equity base is 6,325 crore is their equity base. And in spite of just 2.5% floating stock in retail public, you are having 34 lakh shareholders of LIC now, which is humongous. And this is the reason why like there's a lot of volatility. Institutional players, they hold almost 1%. Whenever even they try to exit, stock comes down because 500, 600 rupees kind of stocks, retail investors can't buy in very big quantity. And they are even tired of getting it average done because they got almost stock at 900 and the stock is at 560, 570. Again, my view is not that bullish as far as the LIC stock is concerned because we are witnessing fall in their fall in the margin, and it'd be very difficult to maintain the market shares going forward compared to aggressiveness shown by uh, private players. So fundamentally, if you see, even almost all brokerages have a buy all on this, stock doesn't go anywhere. In my view, this stock will again remain in trading range of 530 to 630 only. So my suggestion to investors would be to exit from this stock because you are not going to get any major upside in short to medium run here.
Okay, so anyone who has a short to medium term view should exit the stock at this point in time because there is not enough triggers that you believe the stock can go further from here. But definitely you are right that the mega IPO has actually turned into a mega loss for all the investors, especially those who invested in the IPO and that IPO price as well. In fact, those LSC investors have lost about 2.5 lakh crore rupees in this last 1 year's time frame as well. And this is despite most of the brokerage houses really going ahead and giving a buy recommendation on LIC as well. But while from day one LIC shares have disappointed the investors, Ashish, do you still believe that troubles really aggregated for the company after the union budget introduced a new tax proposal on the higher premium annuity?
Yes, this again a negative factor for these insurance company for higher premium amount will attract higher taxation. So this is again one issue which will inhibit the larger policies intake. And mind it, LIC is the one like which is having more focus towards the retail individual investors. So I think the 60% plus business comes from individual policy holders and there's a significant percentage come from high amount of premium, this 5 lakh and above, because those people who are traditionally using products of insurance for investment as well as for life coverage purpose, they will take such policy. But I think this is again a negative factor as far as LIC is concerned and other life insurers also. So we are witnessing that neither LIC nor other private life insurance stocks are performing at all.
Correct. But would you say that Ashish, still in India, which is largely an uninsured nation, there is enough opportunity for investors which have a long-term outlook to really tap on the opportunities in this space, whether it is LIC or the other major players as well. How would you really advise investors who are keen on investing in this space? Does this space really offer enough opportunities for the long term? Say somebody who wants to invest for 5 years long perspective, should one really go ahead and buy some of the shares, and which ones would you be more positive on?
None of these insurance companies are targeting those people who are uninsured because they are not having the means of paying premiums, etc. So nobody is even targeting those people who can't be insured. For them, there's a government schemes are there, so they are taking coverage there. The major battle right now among the insurers is to cover more underinsured people. So people have just bought an insurance policy where they are paying just 10, 20,000 rupees premium and their incomes are going up. So this is something like area where more and more people need to be tapped. But only problem is now the maximum people are going, those who are going for insurance are going for term cover along with they are buying the health insurance cover. So as far as buying life coverage policy for endowment or money back plans are there, there's drastic reduction because of a lot of awareness is there in the system. So this is the reason I'm not that bullish as far as the earnings are concerned of insurance companies and
Hmm.
particularly LIC, where a lot of policies are having debt more than equity compared to the peer set. So still, if you want one stock to buy in this sector, I think SBI Life Insurance is the best.
Okay. Ashish, what will it really take for LIC to really regain the investors' confidence? Of course, we are still awaiting the quarterly earnings for LIC. What will it really take as a strategy change? What should the company be really focused on in now that it is in the stock market fray, and there are a lot of investors that still believe in it? No matter how FII holding has reduced over a period of time, we've also seen the mutual funds and FIIs both have reduced stakes in the counter. In the March shareholding pattern itself, we've seen mutual funds in LIC have lowered to 0.63% from 0.66% in December. So there's been a decline. FII holding has gone down from 0.17% to 0.08% in Q4 as well, and that's also on a quarter-on-quarter basis. Retail investors chose to buy the dip, while their ownership has increased. Even though the total number of retail investors has reduced, the ownership has actually risen from 1.9% to 2.04%, and that's on a quarter-on-quarter basis. But to regain the larger confidence of the analysts and the investors community, what will it take for LIC to really change that mindset?
Whenever you buy a company, there are three things that you look at in that company in long run. First is profit, second is profit, and third is profit. So until as you generate higher profit, you show growth, consistent growth, investor won't stick to you. And this is what we are witnessing that post IPO only. For every quarter, we haven't seen any encouraging numbers from LIC till date. In last
Hmm.
quarter also, they did 6,000 crore profit, but 5,600 crore was transfer as a part of profit from one account to another. So I'm not that bullish as well against LIC concerned. If they are more investor savvy, they need to plan some buyback or some dividend or bonus, something that sort should be done. But ultimately, it's your average premium growth that is EV, etc. They need to continuously improve instead of static numbers as well as other parameters of the insurance company we are also there to improve on that. But looking at the competition, it looks like in short term it will be a Hercules task to show that kind of numbers of growth.
Right, it should be a Hercules task in the near term to really beat those estimates as far as the earnings are concerned. But on a valuation basis, how do you see LIC versus the other peers in this space?
Yeah, valuation wise, this is one of the most attractive. If you see enterprise value to market price, like share should be at least 800 rupees by now, but it is getting lot of discounting because the market is not envisaging the kind of growth momentum which is there in other insurers, same momentum is in LIC anymore. So, in my view, valuations are attractive, but still, market is not buying those now.
Correct. In your view, which are the most key challenges that the that LIC is facing at this point in time? In the first year of operations, we've seen multiple headwinds for the company, including weak market conditions, changes in the tax policy, and recently the Adani Hindenburg row as well. And despite all of these challenges, LIC continues to hold on a number of Adani stocks in their portfolio. In fact, the holding has just about increased. Your own thoughts on what are the key challenges that the company will have to work on?
Adani is one of the investment only and very small percentage. If you see overall book size of LIC as such, even equity is also very small percentage. They are having major investment in debt and PSU bonds and stocks, all primarily. So I'm not that much concerned as far as their Adani holdings are concerned. In my view, this is part of their investment or treasury thing. The major focus or the major thing on which LIC need to work on is how to attract, first of all, more and more agents, because now getting more quality agents is a very difficult task. Second, the kind of distribution reach which is being created by SBI or Max Life through their Axis Bank tie-up, etc., and ICICI, they are garnering more and more market share because they are doing a lot of cross-selling, which is not the option for LIC agents as such. So, in my view, it will be challenging unless they do aggressive campaigns and come out with some unique products. Till that time, in my view, getting new customer onboarded, how they used to onboard in previous year will be a difficult task. So these are the few things I think LIC need to work on.
Right. So, as a call, you did say that anybody looking for opportunities in LIC for the short to medium term, it's going to be a Hercules task for LIC to really perform and, give returns in this current scenario where a lot of things are working against the firm, and the company will have to also work on its own earnings as well, which looks to be a tough task at this point in time. But for all those investors of the IPO, would you say that, one should take the loss here and book losses and perhaps look for opportunities where you can recover in the markets?
One thing is clear, like if you are having so many shareholders, it's very difficult for any stock to move. We have seen in Yes Bank, in spite of whatever numbers they are coming out, 50 lakh plus shareholders, the stock just moved 20-25 paisa in one day. Same cases with the LIC, because there's so many shareholders, it will be really difficult to move that stock. So my suggestion will be from retail investors, until you're a long-term investor having a 5-year time frame or something. I'm not expecting IPO prices going to come back in this.
All right. Well, thank you so much, Ashish, for being with us on the show and discussing all these insights about LIC. 1 year of listing, the pain continues and might continue for some more time before we do see some remarkable changes on the earnings, fundamentals, and also the macro scenario, which works for the life insurance companies in India. Many thanks for being with us. Looking at the markets right now, still lower in trade, about 350 points of a cut is what you can spot on the Sensex, 61,580, 18,189 currently for the Nifty as well. It's 0.5% down as far as the benchmarks are concerned, but they're actually away from the lowest point of the day as well. But we'll continue to track the markets for you, and you can do the same by being with us on Business Today TV. Until then, many thanks for tuning in.
Privatization of banks seems to be off